Welcome to the deep dive. Today, we're digging into Bitcoin's current market state. It's a bit perplexing right now. We've pulled together a whole stack of sources, market data, expert takes, even some social media polls, basically, to give you a clearer picture of what's truly unfolding. Our mission, really, is to find the most important insights, help you understand the forces behind all this crypto volatility, and maybe what it means going forward, because the market's trading, sideways. But beneath that surface calm, there's this really fascinating, almost perfectly split debate about where Bitcoin's heading. Okay, let's unpack this. So first off, what does sideways market actually mean for Bitcoin right now? Essentially, it's consolidating. It's stuck trading in a pretty narrow range. The sources are putting Bitcoin around, $104,522 currently. But here's where it gets interesting, where you see the tension. There was a recent poll on Twitter by analyst Matthew Hyland, got over 1,300 votes, asking people point blank, Bitcoin to $94,000 or $114,000 next. And the results, practically a dead heat. 50.2% said down to 94K, 41.8% said up to 114K. I mean, that is incredibly close, like closer than a coin flip. For a market that's usually known for strong trends, this feels, well, almost like paralysis. What does a split that close tell us?
It is fascinating, isn't it, how tight those numbers are. It really highlights this deep tension in the market. And just to give those numbers some context, a drop to $94,000, that's about a 10% decline from where we are now. On the flip side, a rise to $114,000. That's roughly a 9% gain. And importantly, it would mean a new all-time high.
Right, beating the last one from May.
Exactly. It would surpass that $111,940 peak set on May 22nd. So this near-perfect split really suggests deep indecision, bullish, bearish forces, almost perfectly balanced, makes any big move hard.
Okay, and let's quickly look at the recent history just to ground us. Bitcoin hasn't actually hit that $94,000 level since May 6th. That was just before it managed to climb back over $100,000 on May 8th, which is the first time in 3 months. But even with those moments, Bitcoin is still down overall, about 2.09% in the last 30 days. We even saw it pop back above $110,000 briefly, wasn't it, June 11th?
It was, yeah.
That got hopes up for new highs, but then it dropped back pretty quickly, down to around $103,000. So what happened there? What triggered that sudden shift?
Yeah, that's where we see the connection to geopolitical events. Sources we looked at point to Israel launching airstrikes on Iran last Thursday as a key trigger for that specific drop. And since then, those tensions seem to be mounting. You had, for instance, U.S. President Donald Trump calling for Iran's unconditional surrender and threats towards Iran's supreme leader. Now, just to be clear, we're purely reporting on how these events are described as impacting the market. We're not taking any political stance here.
Absolutely.
But that direct link, geopolitical flashpoints hitting Bitcoin's price, it does challenge that idea of crypto being totally separate, apolitical, shows its sensitivity to global stuff.
And that sensitivity, combined with the sideways action, it seems to have really dampened the mood in the crypto market overall. We saw the Crypto Fear and Greed Index, the one that pulls together volatility, volume, social media buzz.
Yep, the sentiment tracker.
It actually flipped, went from greed back down to neutral just on June 20th, scored 54 out of 100.
Right in the middle.
Exactly. 454 perfectly captures that shift, doesn't it? From excitement to, well, just caution, indecision, really.
And it's not just crypto feeling this, which is important. If you look at the bigger picture, broader financial markets are also kind of treading water. The S&P 500, for example, it was down about 0.5%, 0.48% over the 5 trading days up to June 18th. Even Michael Saylor's company, MicroStrategy MSTR, which holds a lot of Bitcoin.
A lot of Bitcoin.
Right. Their shares dropped 2.43% in that same period. And over the last 30 days, down over 10%, 10.74%. So it suggests this isn't purely a crypto thing. It's more like a wider economic uncertainty causing this holding pattern across different assets.
Okay, so there's caution, there's broader market correlation, but, and this is interesting, there's a strong counter-narrative too, right? Especially from institutions. The U.S. spot Bitcoin ETFs, they're still seeing money come in. Pretty significant amounts.
That's a key point.
Like $388.3 million in inflows on just one Wednesday. And that marked 8 straight days of new money coming in.
Consistent inflows.
It really suggests that despite the short-term wobbles and the neutral sentiment, some big players have the sustained long-term confidence in Bitcoin.
Exactly. They're looking past the daily noise.
And speaking of long-term views, that brings us to this debate about bear markets. Michael Saylor came out pretty strongly, didn't he, on Juneteenth?
He did.
Said the bear market will not return for Bitcoin, full stop. That feels bold given the history.
It is a bold statement. And it really highlights these two sort of distinct ways of thinking right now. You've got Saylor, likely focused on fundamental scarcity, adoption curves, basically arguing Bitcoin's matured beyond those old cycles.
Uh-huh. Permanent bull case, almost?
In a way. But then you have experienced traders like Rekt Capital who look purely at price action, market structure, and they're saying, well, it's very likely when a bear market will occur after this bull market. They see cycles as inherent.
So totally different conclusions from seasoned people.
Precisely. And it makes you ask, which framework fits best now? Long-term adoption or shorter-term market mechanics?
It's a fundamental split. And yet, despite all this immediate uncertainty and debate, some analysts are still looking further ahead, quite optimistically, actually. We're seeing bets being placed on Bitcoin hitting, the $130,000 to $135,000 range in Q3.
That's right. And some are even more bullish. BitMEMX co-founder Arthur Hayes, his firm has hopes for Bitcoin reaching $250,000.
Wow, $250K.
By the end of this year. So yeah, very strong long-term conviction from some corners, even with the current sideways chop. The long game is definitely still alive for many.
So wrapping this up then, it seems pretty clear that the sideways market isn't really calm at all. It's actually hiding this really deep division among experts, among investors, driven by, everything we've talked about. Crypto specifics, geopolitics, wider market trends, even just different core beliefs about Bitcoin.
Exactly. To really get a handle on this market, you can't just look at the price number flashing on the screen.
Yeah.
You've got to dig into the sentiment, the global factors that are clearly having an impact, and these really starkly different expert views. It shows the complexity.
Which leads to maybe a final thought for you listening. Given how divided the experts are and how much things like, airstrikes can suddenly shift the market, what does that tell you about the challenge, really, of predicting the future in any complex system? Something to think about.